Hello everyone, my name is Andres and welcome back to the Edel channel. Today we are talking about how Edel will grow. So there are two ways how you can grow any sort of company, especially crypto company. You have bottom up. That's the way how basically everything is growing. Bottom up means retail first and then you go into institutions, and you have top down, right? Where some bank is giving you is onboarding, or you're onboarding a bank as a client, you build something for them, they use it, and then everyone is using it because they are doing it, right? Now, if you think about it, in crypto, everything is working bottom up, right? You have Bitcoin started with a small group of computer science nerds, then went bigger into drug dealers, and then retail people, and people want to buy CSGO skins online, and then retail. And now we have ETFs and banks are buying Bitcoin, right? The same thing with things like Robinhood, with Revolut. It's all small people first, and then at some point you become so big that institutions cannot ignore you, right? Now, I've said countless times that securities lending and Lombard loans, the two industries that Edel is disrupting, together are around $7 trillion. Lombard loans 4.5 trillion, securities lending 2.5 trillion, right? Now, we are speaking to these kinds of institutions that are doing securities lending, and I can tell you the infrastructure that is available right now in DeFi is so far from what they are doing now that it would require a lot of convincing and education to do a top-down approach, right? I'm not saying we're not doing that. We're having these conversations and they're going quite interesting right now. But we have the chance here to redefine the rules, to rewrite the rules, how lending is being done for these kinds of assets. So how we see growth is the same way any other DeFi protocol or any other product in crypto has been growing over the past years. Start with a small subset of users, people right now who are holding tokenized equities. That's not a lot of people. Ondo has 8,000 holders across 3 chains right now. That's it. Xtox has more. Most are on Solana, which we are not targeting in the beginning. And most of them are on centralized exchanges. Now, let's say there's 20,000, 30,000 people that are actually doing, tokenized equities. Not so many. Now, this is the group where we start off with, right? Offer a service to these people that no one else is offering. Use your shares as collateral, borrow dollars against, use dollars as collateral and borrow the stocks against them, whether or not you want to go long or short, right? Now, we go bigger, right? We have already a preview integration, which means that people can create an account using their email address, using Google login or Apple login, right? Now, suddenly someone who doesn't really care about Bitcoin, ETH, and meme coins, who has stocks, right? Who sees, oh wow, I can earn some yield on my stock, right? We made a video about the impact on how much 2% extra yield on your S&P 500 investment may or how that impacts your ROI, right? If people see, oh wow, I can invest here, this is safe, I can earn some extra yield on top of it, right? You will get more and more retail people flowing into it. And then after you reach a certain size, let's say between 500 million and a billion, right? Suddenly the interest rates and the yield that people are paying to borrow or that people are earning to lend are different, also slightly different than the interest rates and the yields available in the traditional securities lending market, right? So this means that suddenly there is arbitrage opportunity. Hey, I can borrow Tesla shares on the traditional market and lend them on this platform called Edel. I pay 0.5% to borrow and I earn 1% to lend. That's 0.5% free money. Let me try this out, right? And this is how you slowly suck out liquidity from the traditional markets into the DeFi markets, because there are imbalances, right? That's the same reason why there is so much money in these perpetual exchange markets, right? Because there is arbitrage opportunities. There are funding rate arbitrages that you can do. Arbitrage is what hedge funds love, right? Making money, even if it's a little bit of money, without taking directional risk. So I don't need to hope and pray that Bitcoin goes up. I can just hold Bitcoin, short Bitcoin, I'm net zero, and I pocket 8, 10, 5% per year, right? It's free money, right? Risk-free, free money. And this is what powers finance. This is what makes the hedge funds go here, go there, right? And this is actually one of our advisors said that this is the thing that excited him the most, which is why he joined Edel, right? Because he sees that there are going to be these arbitrage opportunities, and we call it vampire attacking traditional finance, right? Building a new venue, starting with a small subset of people using this technology, starting growing, bigger, and suddenly these hedge funds can come in with size and farm the arbitrage. They make their money, perfect, right? But they bring more liquidity. They make the product even better. They bring down the cost. They increase the returns, right, for all participants, right? And that's how you go. That's why initially the growth will be slow. And suddenly once you reach a threshold where hedge funds feel comfortable of, hey, let me do this, because the money that we can make outweighs the risk that we are taking, then you go, right? That's how you grow, or that's how we see growth is going to happen for Edel over the next years. So thanks everyone for watching. We see each other again in the next video. Until then, have a good one. Bye bye.